Hey, dads and crypto enthusiasts, welcome to another episode of Dad's Gone Crypto. Today, we're talking about something that could change the way you grow your savings. And no, we're not talking about that old school bank account with that sad little 0.05% interest rate. We're talking about crypto staking. That's right, staking. No, not the kind where you cook up a ribeye on a grill, but how to make your money work for you through blockchain staking platforms.
Yep, sorry to all you backyard barbecue masters out there. Today we're not talking about real steaks, but we're diving into the world of crypto staking. And if you're a beginner, don't worry. We're going to make this easier to understand than setting up that pop-up tent that you lost the instructions to.
Absolutely, Ryan. And just remember, folks, this is not financial advice. We are just, basically opening up your eyes to possibilities beyond the conventional ways. Crypto can be beautiful, and it is beautiful, and it can be profitable too. But do your own research before diving in. Now, let's get into it. All right. So, what is crypto staking in a nutshell? So, let's break it down. Staking in crypto terms is like putting your digital assets to work. Imagine your dollars just chilling in your wallet or in a savings account at a bank, earning zilch. But when you stake it, you lock it up in crypto, and the power of a blockchain network gives you that return on investment and you earn rewards. It was sort of like interest.
Yeah, but instead of the bank using your money to give out loans and handing you peanuts in return, with staking, you're helping to validate transactions on the blockchain, keeping things running smoothly and actually getting rewarded for it. It's like getting that participation trophy, but this one actually has some value to it.
And on that note, Ryan, it's not just like these rewards are conjured up into thin air or from thin air. It's like you said, it's validating transactions on the blockchain and they're rewarding users for it, and that's how it's generated. Staking versus banks, what are some of the pros and cons? Now, a lot of people might ask, why not just leave your money in the bank? Well, I hate to say, banks are kind of like that dusty treadmill in your basement. You could use it, but it's probably not going to get the results that you want. And also, if you really do a deep dive on the financial markets, your cash, your dollars that you put under your bank or underneath your bed, it's losing value every year. The $1 million that you might have had 1 year before doesn't have the same buying power a year later. In fact, it's 14 more or less 14% less. So if you keep that cash and it's not working for you, your buying power actually goes down year after year, and that $1 million doesn't get you much.
Yeah, absolutely. I mean, with banks, you're earning practically nothing, right? You're earning fiat. If you're getting a 0.5% interest rate, well, unfortunately, with the with inflation, that 0.5% interest rate, or even if you're getting a few percent interest, it doesn't matter. Inflation is destroying that value anyway. But with staking, depending on the platform, you could be earning anywhere between 5, 15%, or, even more. Some of them 18, 20, 30%. And remember, when your bank is charging you all these fees for everything from overdrafts to ATMs, staking pays you. You're not paying them. So it's a pretty cool thing. And you're not using fiat, right? So you're staking crypto, which we're all in crypto because we're looking for it to go up, right? And yeah, we have our ups and downs in the market, but in general, crypto is on an upward path where fiats are almost always on a downward path.
Mhm. Right. And it's not all about rainbows and unicorns. One thing to remember that your staking does come with risks. It's like locking up your assets for a certain period of time. And if you don't choose the right coins or choose the right, investment portfolio, what happens then? You could risk losing it all. So that is why you would need expert advice in choosing the correct staking platforms or investment platforms. Um, Banks, for all their faults, are generally stable. Staking is tied to the market. That means the value of your cryptocurrency drops as obviously the market drops, and you could lose more value.
Yeah, so why don't we go over some of the risks and rewards of staking, right?
Mhm.
As much as staking sounds like that golden goose, there are risks. You've got market volatility, that's a big one. If the price of your crypto tanks, your rewards won't matter much if your principal investment loses a bunch of value. However, if you're in good coins that you really believe in, Bitcoin, ETH, some of these really top cryptos, I'm of the opinion that those are going to go up over time. So as long as you're not in it for the short term, it kind of mitigates that.
And that's where obviously doing your homework, and you're starting to hear a lot about Bitcoin and Michael Saylor gobbling up every opportunity to have more, and ETFs gobbling up and BlackRock gobbling up Bitcoin. So if those big boys are buying Bitcoin, all right, how can you make your Bitcoin, if you do invest in it, how do you get that to get a little bit of interest and actually take over? And Ryan, and then there's slashing, which isn't some new video game attack. It's when a validator messes up because his line dropped or he's not connected to the staking platform, and some of your coins get taken away because of a penalty. Obviously, the platforms want consistency being up because that protects the network. So they penalize people for whatever. Let's say in my country, when we have a power outages and everything goes down, they'll penalize me for it. Now, there's a lot of people staking to my pool, then it could cause a bit of issues. Earning that sweet API and potentially watching your assets grow is something banks just can't compete with. And that's the beauty of decentralized finance and blockchain technology.
Yeah, nobody's getting real excited about that 0.5% that Wells Fargo's throwing out there. So.
So staking for beginners, guys. Let's get started. There's a lot of platforms out there, and you gotta you you can go down this rabbit hole and like think to yourself, what the hell? All right, it can get really, really crazy. And the point of staking for beginners, as the show is titled, it's to show you some simple, easy ways, all right, that you can take. You're gonna buy Bitcoin, but what, you're going to keep it in your wallet and do nothing with it? Put it to work. You're going to buy some Ethereum. Okay, cool. Put it to work. Because if you have the long-term vision of, well, I'm putting a little bit away. So in my mindset, I want to buy 0.21 Bitcoin per child, per family member, and leave it in a wallet, all right, so that in the next 10, 20, 30, 40 years, it's going to grow. All right. So there's the growth of the actual coin, and there's the actual interest that we can earn as well. So that's what I'm aiming for. But I want to keep it nice and simple. I don't want to get complicated. And we're going to go through some of these things. So one of the big dogs is Binance. Now, Binance at one point in time was taking over the world. The US slowed them down. All right. But they've proven to the world that they are the biggest, and they're pretty sound, right? So, and they're in multiple countries, and their job is to obviously find and work within the regulatory perspective of each country. Unfortunately, not in America anymore, but they work within the country's platform, in the country's regulation platforms and policies, which allows the average person in that country to invest. The platform has 60 different currencies. It's got flexible staking, it's got fixed staking, which we're going to go through shortly. All right, guys, so I'm logged into Binance. All right, there's a Binance account. So here we go. Buy crypto, markets, trends, futures, earn. So you'll go to the top over here. You guys can click the links below, and there's a little link that you guys can join up using our affiliate code, and it contributes towards the channel. We thank you for that. Click on earn, boom. All right. Now it takes you to this earning page. So, oh, look at my holdings, 0.57, and I've got nothing over 30 days. Okay, it's it's a lot of crypto. This is just one of my mock accounts. Anyways, all right, let's page down. So you need to do some reading because Binance does a lot of advertising on particular new coins. And there's great APRs on potential new coins. And you can decide if you want to invest in the coin, or if you already invested in the coin, well, let's put it to work. So if you page down over here, you click on duration. So you got flexible. Flexible means that I can put it out when I want, right? And then I got fixed, which means that if I pull it out and I fix it for 90 days and I pull it out too soon, I lose that interest for that period. But flexible, it's a daily occurrence. So I can make, let's say I want to keep it for 30 days, but all of a sudden something's happening in the markets and I need to go buy something, and I can pull it with my interest. So depending on what your appetite is, obviously fixed. is there's better returns on investments. So let's have a look at some of these things. All right. So do you own some Solana? You should be. Anyways, here's the earnings 0.38 to 151%. Okay, that caught my attention immediately. So I'm going to click on it. Boom. So simple earn, that's 0.38% to 5.6%. Then we've got Sol staking, 5.22%. And we've got dual investment. Right. So let's go simple. Let's keep things simple. I'm going to click subscribe. All right. So now this pops up. So now it tells you, what do you want to do? Now, these things are not always available depending on the demand. They only like allow a certain amount of staking to happen, and then it closes and a new one will open. But have a look here. So 14 days, I get 1.9% per annum. 30 days, I get 2.9. 60 days, 90 days, 120 days gives me 5.6%. I'm not selling Solana for the next year. That's my conviction, right? I'm gonna buy different things with new fiat, but I want to keep my Sol. So this seems pretty good to me. So I click on that, stake the maximum of my Sol. All right. And then basically I click read all the terms and conditions, and then I confirm. All right. Cool. All right, guys. So using a platform like Binance, which is centralized, right? There's regulatory. Each country they have to abide by each country's laws, so they have to make sure that things are above board. So I get to choose where I'd like to. If I've got some USDC, some stable coins, those are the type of returns I can expect. So I want to click on view more. I'm paging down over here. And okay, tier is 9.56. That's interesting. OM, I don't know what OM is, but that's giving me 19%. So maybe I should get some OM. Who knows? All right. So you guys can decide what you want to do. But remember, keep things simple. All right. Don't get complicated just yet. Start with the simple investments and then learn about the different products and then obviously increase. Now, this is self chain. All right. So it's a new chain out. And obviously, they're trying to create more hype around this and stabilize the price. So you click subscribe. And then if I hold it for 90 days, they give you 18.9%. Obviously, put some in there. First distribution date, interest yield, redeem, and so forth. So it might entice me to say, well, let me go do some homework on this chain. Oh, okay. Does it have adoption? Does it have good quality founders? Do you feel that there's going to be adoption with this? Okay, if my conviction is yes, let me go get a little bit. Okay, so it's sitting in your wallet. Well, put it to work. Put it in one of these investments over here. All right. And you can do this with BNB as well. So the Binance has a token, and you can basically stake the Binance token. And the cool thing about that is when new projects get listed on Binance, because you're staking the Binance token, they give you a small portion equivalent to the amount of coins you're holding as a thank you very much. So you're basically interest on BNB, but you're also getting tokens as well in the new projects. So you get them at base level. So I had a friend that had quite a bit of BNBs, and he staked it for some time, and he would tell me, oh, I got these like 5,000 of this and 5,000 of that, and it's valued at X amount. And I'm like, oh. But that's the cool part about it, right? So if you believe in Binance, you believe in Binance is going to go, supernova in the next 10 years, you buy their native token, you stake it, put it to work.
Yeah, absolutely. I wish we could still use Binance here in the U.S., but unfortunately, our regulators have decided that we're too stupid of investors to make our own decisions, so they won't let us in there. But for our U.S. audience, there's other good options for staking, for centralized staking. So Coinbase, great option. It's user friendly. It's super easy for beginners. I know at least in the U.S., I think most people when they're getting into crypto, they open up a Coinbase account. It's easy to connect to your bank. They handle all the technical stuff like the node operation and all that for you. It's basically just as easy as Sean just showed on Binance. It's staking on easy mode. Rewards are a little bit lower, I would think, but it's reliable and as safe as crypto gets, in my opinion. Why don't we could take a quick look at the Coinbase exchange as well. I'm not going to do much with it just because Sean already showed you how all the staking works, but here's and it works the same way as it did on Binance there. But so on Coinbase here, you can see some of the different rewards that you can earn. Basically, when you log into the platform, if you click over here, you click on Explore, and Explore brings up, all the different tokens on the basic Coinbase exchange. And then if you come over here, you can see that you can earn all these different APYs just by staking. And on Coinbase, it's a one-click stake. So basically, you've got Cosmos is earning 13.97% there. So if you own some Atom, you can get that. If you own some Polkadot, you can get 12.67% with it. Solana's paying 4.79% APY on Coinbase. And I think, what was it paying, Sean? It was at 5 something on Binance, right?
Yeah.
So yeah, so it's a little bit lower, but it's not bad. If you see here, I mean, you can even stake. Let's say you've got some USDC that you're sitting. You've got your dry powder waiting for some more crypto investments. You could be earning almost 5% APY on your USDC, and it goes down from there. You've got Avalanche, Polygon, staked wrapped ETH or regular ETH. Basically, super simple. You click on any of these if you want to, stake USDC. Click USDC, brings up the circulating supply, shows you what your reward is, your 4.7%. Click stake, and you're all good to go. And it's staking, super easy. So that's again, for our US guys out there, or really anybody. I mean, Coinbase is all over the place, so it's a good, safe way to earn a little extra APY on your investments.
All right, guys. So these were examples of, and Ryan's going to give you one more shortly, but these are examples of centralized exchanges, meaning that there's brick and mortar. If something happens, you can literally go to their offices and say, hey, listen, what's happening? If there's a rug pull on their platform, governments will step in and say, listen, what's happening? So this is centralized, similar to that of a banking system, but the way in which their products operate is in a deepened type way.
Yeah, the centralized exchanges, yeah, as you just said, I would consider that to be the safest form of staking out there. Crypto.com is another one, as you just mentioned. As far as US goes, in the US, you've got Coinbase, you've got Crypto.com, you've got a few of them, but those are probably your safest options. In Crypto.com, you could stake. I think they've got more than 21 different cryptocurrencies you can stake. And it's very similar to what Coinbase was showing you there. So, anywhere from like 5% to, 16, 17%, depending on what you're staking. The cool thing with crypto.com, they actually have their own currency called CRO. And if you're staking CRO, you get some other perks with that. You get extra rewards, extra APY, and then they also have a credit card you can get. And depending on how much CRO you're staking, you can get all different levels of that credit card, which give you different perks. I know, I don't remember off the top of my head, but I think they were giving away like you'd get free Netflix subscriptions and different things like that, depending on which which card you had. And also, you're going to get different amounts of cash back when you use that card. So pretty cool thing. I'd recommend that one as well if you're looking for a good, safe, centralized exchange to stake on in the US here.
Yeah, and you should see all their advertising all over. I think they
Yeah.
sponsor the UFC, they sponsor Formula One, so they're quite big in that space. So it's good for them to be out there getting their marketing on. But in having said that, guys, just also remember it's still a business, right? It's still brick and mortar. It's still, even though it's centralized, there's no guarantee. There's no guarantee. Look what happened to FTX, right? People put
Yeah.
a lot of faith in a centralized exchange because, he was giving, lots of money to the different government officials and everything's fine. Meanwhile, if you looked under the hood a little bit, things were not fine. So just be careful. Like anything, you got to kind of do a lot of work and don't put all your eggs in one basket. So don't just take crypto.com and put everything in there. Diversify, put it on multiple platforms so that if touch wood, anything happens, at least you're not wiped out like a lot of people did with FTX.
Yeah, absolutely. So, that's centralized exchanges. Again, as Sean said, they're probably the safest bet, but at the same time, anything can go wrong in there. and the APYs probably aren't going to be quite as much you're going to earn in some other areas. So let's move into decentralized staking. So decentralized staking, these are platforms that are a little more, let's say, crypto-esque, right? So if you look at centralized exchanges, it's kind of like, you're dealing with the bank again, right? Those are regulated areas. You feel a little warm and cozy having it in there, but you're probably not going to earn as much. When you get into decentralized staking, now you're talking about projects that don't have a central authority looking over them, and there's some very creative ways of using your funds in there. So if you want to think about centralized staking is like the convenience store, right? Super easy to jump into and run in, grab what you want really quick, and get out. Decentralized staking is a little bit more like the farmer's market. You can get a lot more involved. You can get in there and get in and see the nitty gritty and get a lot closer to the action.
Yeah, so take Lido, for example. You're not just staking your ETH, you're getting back something called ST ETH. So there's a little baby ST, and then you got your ETH, a token that represents your staking ETH. And it's a cool thing about this is because the ST ETH in DeFi protocols is like lending or providing liquidity. I know it's getting a little bit crazy since this is beginner's guide, but just think about it is that as you stake, you get this STETH back, and then now you can lend it, all right, to somebody else. And then on top of that, you get an additional reward back from borrowing it out.
So speaking of Lido, here we'll run over to their website real quick. And Lido, it's lido.fi if you want to go check them out. I mean, you can see if you could stake your Ethereum, you can earn 3% on your Ethereum that you stake, right? But as Sean said, when you do that, you're going to get in return the little ST ETH, right? So this is what they mean by liquid staking. What that means is that you are staking ETH and you're earning 3% APY. With that ST ETH, you can take your liquidity. So now you're getting an equal amount in ST ETH as your rewards. You can take that ST ETH and use it in DeFi applications. So you can use that in all of these. I mean, basically here they say ST ETH is everywhere, right? Because they have a pretty huge ecosystem. You can use that ST ETH in all of these different platforms. You can use it on Aave, which we'll get to in a minute, 1inch, Curve. So yeah, if we go down here, you can see you can actually use your ST ETH in so many of these different applications, and you can see they've got over 102 applications. For instance, this one's called Sky. You can go on there, and with your ST ETH, you can borrow against it. So basically you can use your liquidity, right, on the Lido platform, stake, get a 3% APY on your ETH, then take the ST ETH that you get and use it on these other platforms to borrow against it. So you could go on Sky, for instance, borrow against your ST ETH and get more ETH back in return. It's a way to basically use your liquidity twice rather than once. Pretty cool concept.
Hmm. And that allows you to collateralize, obviously, the token, but you'd have to pay back that loan. Otherwise, I think you'd lose your initial. Is that right?
Right. Yeah, correct.
Yeah. Okay, cool. So this is some examples of various ways in which it, like we said, we went a little bit technical on that side, but start with the basics and then, of course, learn and then try a little bit. So the only way you're really going to learn is to throw a little bit in there and see what happens. All right, make mistakes, learn from it. And then, of course, when you're comfortable with the platform and you feel and you trust it and you've done your homework, then you can put a little bit more. But don't go put the house, the cat, the dog on it because that's just too high risk.
Absolutely. So yeah, we talked about Lido, and then yeah, like I said before, don't forget about Aave. You could stake their Aave token, and it helps secure the platform. But heads up on all this stuff, just as Sean just said, decentralized platforms, they do come with a bit more risk. There's always that smart contract risk. So make sure you're staking on well audited platforms, like the ones we've shown, or I mean, there's a ton of them out there. You just got to make sure you really do your research before you get involved with these kind of decentralized platforms. I think a little more than the centralized stuff. So that's, now we've talked about centralized exchanges that you can stake on. We've talked about decentralized platforms that you can stake on. And there's another form of staking, and that would be staking directly with a project. So there's tons of crypto projects out there that part of their tokenomics allow you to stake their token back on their platform and earn token rewards. There's tons of them out there, but we're going to talk about a few of our favorites right now.
Imagine you have a strong conviction for a project, right? And you watch them grow, you see what they're doing, they hit their milestones, they're busy growing their team, they are conquering and overachieving, under promising, over delivering, and over time you realize, geez, these guys have something, right? And when the opportunity comes about where you are able to maybe invest in that company, right? You're saying, all right, if they carry on at the rate at which they are building and expanding, potentially this could mean good things later on, right? And one of the great companies that we found a few moons ago, a couple of years ago, is WorldMobile. They decided to say, hey, all right, the legacy system for telecommunications is broken, right? And how do we decentralize this, create a sharing economy where everybody that comes on board and invests with them has a piece of that pie, as opposed to you've got your cell phone. There we go. All right. Do you get revenue from your provider? No, they just take money from you. All right. But they connect you. I'm happy. They're happy. Okay. All right. But what happens if you can invest in a telecommunications company and you get rewarded in a particular way because you have this high conviction that as they expand, they're going to grow? So World Mobile have this, right? And they are they've been around for a few years, and what they're trying to achieve is to connect 3 billion people that don't have access to the internet, the rural areas, the places that top tier companies don't put infrastructure because it's too expensive to run and there's not a lot of adoption. So these guys are saying, well, let's fix that. Let's find these other 3 billion people, connect them, give them digital dignity, right? And see what happens, right? And they've started this journey and they're starting to expand, and things are heating up on another level, right? So how do I get involved with this company, right? Well, I say, well, I start off small. I invest a little bit into their tokens, but now I've got the token. Now I'm waiting, okay? And things take long. You ever built a telecommunications company before? It takes long, right? It doesn't just happen overnight. So you hold on to your tokens. You're like, okay, it's going up, it's going down, it's going down, it's going up, depending on the bear market and bull market. But what happens if there was an opportunity to now stake your tokens, to say, well, I'm in this for the next 10, 15, 20 years, right? So, but it would be nice to get a bit of staking. So this is what these guys have done. So we're going to show you their platform of how they obviously reward you. I'm going to just switch over here. So this is World Mobile's vault. This is how you stake. So you'd have to have a wallet, and now it's called WMTX. They've just migrated to Base into another chain to allow expansions on their platform, which is great things for World Mobile, because it's been on the Cardano blockchain for some time, but that kind of segregates the market a little bit. Now it's on the Ethereum blockchain as well, which opens up the door to potential millions of new customers from the investment side point of view. So the staking platform, so this will change, the staking module plane, but this is as of, just showing you what is really available. So you would invest in some tokens. You have a high conviction later on in the next 10 years, it's going to go up. So you stake it into your wallet. You stake your wallet to this platform, and then it'll pop up over here. And then it'll basically generate you rewards on a monthly basis. If I pull the rewards too soon, it obviously it takes it away from me. So right now on the 9th is the claiming period. So if I claim this right now, I lose those rewards. Okay. If I page down, this is every single month the tracking of it. So the rewards, so these are the amounts which I've just covered up. That tells you on the 9th, that's when it was rewarded. And then, of course, the compounded amount that I receive every month. So this is World Mobile. while I've got it in there, I don't want to sell because they're incredibly undervalued. There are some competitors out there that did 100x on fresh air, all right? And these guys are really building some really quality stuff. And it's not hearsay, it's not vaporware, it's actually tangible, all right? And so I don't want to sell these, but it would be nice to make sure that my tokens are beating inflation and that I can get some sort of reward.
Yeah, absolutely. World Mobile, definitely one of my favorite projects out there. And then we've got, Minutes Network, which is all about communication. You can own switch nodes, you can own validators, or you can just stake your tokens in the main pool and earn rewards. What's neat here is how they've structured their node ownership via NFTs. So basically, you can go onto their platform here, which Sean's going to explain, and you can purchase a node right now during their public sale. And when they launch, you'll get an NFT that shows that you own that node, and you'll be earning node rewards.
So, guys, they're about to hit TGE in the next couple of weeks. They've got 500 switch nodes, which you need 50,000 minutes tokens, and you've got validators, which you need 10,000 tokens, which allows you to own one of these nodes. So it validates, and then that obviously is the big boy. So there's 395 available. 395 sold. There's of 500 and 1,560 of 2,500. So there's basically towards the end, once that reaches 500 and that 2,500, that's when the token gets launched. So what this allows you to do, all right, is basically get a sharing revenue of the network, right? So with minutes, think about you phoning someone overseas. There's an interconnecting call, so it hops to different towers. That interconnecting is called a carrier. That connecting partner is minutes, right? And they can basically beat any carrier in the world based on their proprietary software. So there's no carrier available anywhere on this planet that can beat them on price in connecting good quality calls and the price on calls. So now I'm saying, oh, okay. So this falls into the WorldMobile platform because they're also connecting the WorldMobile clients as well from the carrier perspective. All right. So now I want a potential earning of revenue. So what do? I can just get the tokens, right? And I can wait for TGE. I can stake it to a main pool and get some rewards of that. Or I can have a high conviction and say, I want a validator, right? It'll cost you $3,000 at the moment, and a switch node will cost you about $15,000. So now inside this platform, there's nothing in you, of course, but you'll see here in my current wallet, my tokens, I have one switch node. I will get rewards every single month on the amount of minutes that people are calling all over the world. So as of the end of October, Joshua and his team would have connected 34 million users that will basically make at least one call a week, which are called minutes. And there's a percentage rate in which they charge, and there is a percentage, and Ryan will go into that shortly, on the percentage in which you get. So there's a big portion of that fee that goes back to these guys, the validators and the switch node operators, because we help secure the network, we help invest in their project and allow it to expand. Ryan, can you tell us a little more about just that rewards in that?
Yeah, so the way they're doing this, they've got a pool. So they're going to use all of their revenues to purchase back tokens on the open market. It's a really cool concept. So basically, they're earning, all this money in the telecom industry. They go every month. They take their earnings and they buy back their token. Then of those tokens that they bought back, they're going to give 70% of those back to the node holders. So if you hold a validator node or a switch node, you're going to earn part of that 70%. So if there's 500 switch nodes, right? So if you own one of those 500 switch nodes, you're getting 1/500th of half of that 70% basically. So it could turn into a pretty significant number here over the years as they are expanding their telecom network. There's also another reward so that's the node holders. They are, as a company, they are keeping one of the nodes for basically public staking. So if let's say you don't have the money, you can't go out there and buy a whole node, you could buy up some of the tokens, and then you could stake those tokens to that public node, and you'll earn some of those rewards for yourself as well. Very, very cool structure, and really allowing a huge portion of these rewards, like I said, 70%, to come back to node holders and stakers. So very, very, very cool thing.
So part of your homework, guys, is just go and do some Google searching, right? Find out how much carriers make or how much interconnecting calls make. Just go do it. And yes, if you've got a 32-inch screen, that's how much carriers, it's $1 billion industry for a reason. So what happens if there's a company that comes in that basically disrupts the market by offering good quality calls and cheaper rates? It's a no-brainer that telecommunications companies won't want to use them. So they're not there to compete. So Minutes Network is not there to compete with any telecommunications company, right? They fit into the carrier space, the interconnecting, right? So they fit as one of 6 operators. They fit in there. And then as the call comes through, it says, it goes through the list, who's the cheapest, because obviously the telecommunications company wants the cheapest rate. They say, cool, this guy. Then in a split of a second, it says, is the quality of the call good? Yes, cool, connect. And then the money goes to the carrier. So if it continuously goes to the carrier, that carrier makes a lot. So now you got to ask your question, all right, how many people are connected every single month? And if they're connecting 34 million users, what happens if WorldMobile connect 3 billion users? Do you not think that Minutes will have 3 billion users as well? And they're not solely relying on WorldMobile. All right, they're a business on their own. So as they grow and as they connect more people, there's more minutes being spent. There's more revenue being coming in. There is only 500 and there is only 2,500. So you can imagine, all right, from a passive income point of view, that these could be, and we say could, this is crypto, guys, but these guys are brick and mortar as well. So we have a high conviction. So you're basically investing in a decentralized telecommunications company, right, from the carrier perspective. And coming back to staking, all right, forget about nodes now. Nodes is another form of passive income. That's the beauty of crypto. We just wanted to share that with you. But think about, all right, I've got 5,000 tokens or 200 tokens. Well, put it to work. Stake it to the public node and get your monthly returns, and then you can do what you want with it. So it's allowing your money to basically turn over while you have a high conviction that that price of that token could go up tremendously over the next 10 years as they connect more people.
Absolutely.
All right, guys. So that concludes the staking portion for beginners. Like we said, guys, do your homework on that. Minutes is currently in a public sale, so go check them out. Do your homework. Do some Google research. All right, there is only a few available left on the Switch, and a couple more on the validator. So go have a look over there, and also you can buy their public tokens. I think it's at 30 cents, Ryan, at the moment. So you can buy some tokens as well in the public sale. So what they do is you can buy before it goes live to stop that volatility of bots getting in and pushing the price and then dumping on you. So it's a very clever way of raising. So go check that out.
So guys, remember, crypto staking, it's just one of the ways that you can grow your wealth and contribute to the blockchain networks. But always, always, always do your homework before diving into any of these things. There's always dangers, but at the same time, it could be a great rewarding experience.
Definitely. All right, guys, and we've had some Ryan, we've had some chats in the comments, and what have they been saying about where is our dad's jokes?
Yeah, everybody's saying, what happened to the dad jokes?
Oh yeah. So guys, we try fit it in, but when the videos run long, especially with interviews, we have to cut them, unfortunately. I know you guys love them, as cheesy as they are. But today we've got jokes. All right. So we are back at it, and I am going to kick it off with a related joke. And Ryan, why don't Bitcoin jokes ever make sense?
Wow.
Because their punchline is always decentralized. That is as nerdy
Wow.
as nerdy as they get.
That is about
Vitalik
as
is on the
nerdy as it
floor
gets.
rolling in laughter. That's how nerdy that one was.
Oh boy. All right. Well, I've got I'll have a little simpler one here. What did Kermit the Frog say at his puppeteer's funeral?
Uh-uh.
Nothing.
Uh. And we might get comments. We don't need more dad jokes for another 2
that'll be
weeks.
the end of the dad jokes
Yeah.
after those two.
Yeah, after our performance today, it's just, yeah, they might
All right.
have given conviction that we might not need it in the future, but we will get better. We promise. Oh, sheesh. All right, guys, and that concludes the show. Thank you for tuning in. Please leave your comments below. That helps the algorithm. Don't forget to like and subscribe. And yeah, come share some comments. If you have a question regarding staking in the comments, please post it. Right? If we don't know, we'll happily go look for it, look for the answer. But please, share it with a friend. If you want to get a friend into crypto, share this video with them. We really appreciate it. Let's get to that magic 100,000 viewers. That's the goal. That's the first goal. And yeah, guys, thank you for tuning in.
Yeah, definitely. And guys, join our Telegram chat. We've got a ton of subscribers here on YouTube, and a whole lot of you have not joined into the Telegram chat. And that's a really great place where we can bounce, questions and answers off of each other.
Yeah.
You've got questions about staking. It's kind of hard to answer in the comments. I mean, we're happy to do it, but the comment section is going to take a little longer. If you come into the Telegram channel, we can have direct conversations about these kind of things and, kind of help you along. So get with us in there. The link is in the description. So find us in there, and we'll hope to see you.
Awesome. Take care, guys. Ciao.
See you guys.
The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.